Ladies and gentlemen, welcome back to the online sessions of the classes for our brand slash sales management course that we were conducting. I hope you've all been well in this time of crisis. I know it's a new method of instruction and learning for all of us. I hope you're able to gain some benefit from these sessions. If any of you are watching it live or will watch it later, please do comment and provide feedback and ask questions on the topics that we covered when we were holding classes on campus or questions that you might have on today's presentation. Today's presentation will focus on a brief overview of the topics that we had started off covering before classes were suspended in the lockdown. So any questions, queries, observations, feedback that you might have, please share it on our WhatsApp group. Thank you. So I've emphasized the importance of speaking of business organizations. I've emphasized how important the goal of profitability is. It is the reason why a business is established, and not being able to achieve profits is the reason why a business goes bankrupt and has to stop operations. So, if profitability is the number one goal of a business organization, you know the equation which I have repeated various times, that profitability is just the difference between the revenue and the cost, the revenue that you're earning and the cost that you're incurring in order to earn that revenue. So you've already studied in accounting classes that there are various types of costs. There are salaries, there are cost of goods sold if it's a production goods producing company. There are other general and other administrative expenses, and there are taxes, dividends and taxes till you reach net profit. But the revenue side or the sales side, sales and revenue can be taken to be synonymous for our purpose. Revenue and sales, these are extremely important. No sales, and it's just cost. And if you've encountered a concept like break even analysis, there's a formula for that which tells you the minimum number of units that you must sell in order to make no profit, no loss, so that your revenue and costs are the same. But that's only in tough economic time that company go for break even. Break even can serve as a standard for sales targets, production targets, and so on. So sales is extremely important to the primary, meaning number one goal of business, which is to earn profits. No sales, no profits. So when we talk about sales management, we talk about handling the sales effort or the sales process. You've covered in previous courses the four functions of management: planning, organizing, leading, and controlling. And I've talked about how if you combine these two, then you're talking about planning for sales, then organizing for sales, leading the sales function, and last but not least, controlling the sales function. So the emphasis on this course, as we discussed in the on-campus sessions, is to talk about management of the sales effort primarily. You're familiar with, there's a course or topic like marketing management, advertising management, production management, supply chain management. So it's very important to remember that in order to have an efficient and effective sales function in your company, you have to manage it. So one definition, and you don't have to rote memorize the definitions, try to understand what is being said here, that it is the attainment or achievement of an organizational sales goals. Now, goals you'll recall from management classes, you start with goals when you're planning. And you attain these goals in an effective and efficient manner through planning. We've talked about that, through leading, controlling, and instead of organizing, they've included staffing, training, and there are other functions which relate to the human resource side of the sales effort. So basically, managing the sales process in order to achieve your targets. That's what sales management is all about. The American Marketing Association defines sales management, SM is for sales management, that it's the planning, direction, control of personal selling. Now, this is a rather narrow definition because these days sales can be done through non-personal means as well. For instance, through online means, personal selling can be done. You can send it through a delivery person, not have personal selling. Personal selling is specifically means that there is one human being who is there face to face with you. Uh, Even telephone selling, online selling, that doesn't fall in the category of personal selling according to the strict definition. Now, aside from that, the process of sales management includes recruiting and selecting the right kind of people, then equipping them, depending on what industry you're in, equipping them with the right tools so that they can start their job and do it efficiently and effectively. Assigning, this is again an HR function, you assign different roles. We'll take a look at how there are different levels of sales managers. Typically in Pakistan, there is the national sales manager, then there are regional sales managers, and then there are area sales managers, and so on and so forth down the line. So different levels, and you might have organizational structure based on, um, for instance, the products that you're selling or the types of customers that you're selling. You could be selling to the government sector. Let's say there's a salesperson who's catering to Utility Stores Corporation or the CSD, the Central Supply Depot, and so on and so forth. The routing, this is very important. Again, this links with cost. Your sales people and your distribution obviously has to go through a physical route. And I don't know whether you have encountered this in your business maths classes or not. There are algorithms and formula for trying to determine the best route that the company's salespersons or distribution trucks take in order to minimize the time traveled and distance traveled. Supervising salespeople, this is again a different way of looking at management. Supervision literally means super means above, and vision means, of course, seeing. So somebody you need to look after people who are in training or people who can assign a new task or even to fulfill the control function. Payment and motivation is a very, very important of the sales job. Sales, especially personal selling, is very, very tough. It's not everybody's cup of tea, as the saying goes. It requires a certain type of personality in order to become a successful salesperson. The books I suggested when we were holding on campus classes, especially the book by Zig Ziglar, I think if you ever desire to go into sales field, then you should surely read Zig Ziglar and the book that I think I shared already on the WhatsApp group a few months back. Because from top-notch, famous salespeople like Zig Ziglar, his if you read his books, he is selling the idea of sales to you. He says that you're always selling. When you go into a job interview, you're selling yourself. When you're telemarketing, you're selling. When you're trying to raise donations, you're selling. When you're trying to get something from your boss, let's say an increment or a bonus, then you're selling again. You're selling an idea, you're selling a product, you're selling a property. So it's very, very important. And because this is a very difficult task, there's a lot of, as we've discussed earlier, you have prospects for sales, then you make a pitch to them, and then maybe 5%, maybe 2%, depends on the industry. Out of the total number of people you contact, a very small percentage will actually buy from you. So there's a lot of discouragement that goes on, and to be a successful salesperson, you have to have that personality and persona in order to be able to deal with a rejection from clients. If you read Ziegler's book, the one I shared, he talks about how he had to take a sales job and how his first attempt at making a sale was a failure. But he learned his lesson, and then once he made his first sales, and he says that he never looked back. So, because the salesperson's job is tough and typically involves outdoor work, meeting with people, waiting in waiting rooms for the client to give them the time. If you've been to even to local hospitals, you may have seen, I'm talking about pre-corona times, you may have seen people standing around with large bags. These are the pharmaceutical sales reps who are waiting for a chance for a 5-minute presentation to give a presentation about their meds to doctors to encourage them to prescribe their brand of medicine rather than the competitor's brand of medicine. And there are a lot of ethical issues in pharmaceutical sales as well. For instance, they in various ways bribe some doctors in order to prescribe more of their medicine. So it's very, very important to properly motivate and pay salespeople so that they are rewarded for the extra effort that they are making. And we'll see some of those methods later on. Your objectives in managing sales, you set a sales target, which is the first point, the sales volume. How much sales do you want? Then, very importantly, sales alone is not enough. How much of sales versus cost, what percentage are you going to make in terms of profitability? If you recall from earlier management or marketing or finance or accounting courses, there is a ratio of profits to sales that's calculated. So just sales is not enough. Your costs have to be in control in order to earn profits. And of course, almost every company wants to continue to grow, and that's also very important. So sales growth. Uh, and again, as I've seen in the companies that I work for, sales targets are very, very tough. Typically, I'm just giving this as an example. Let's say the company wants to achieve or will achieve profitability at 90 units sold. Now, in order to achieve 90 units and a comfortable profit, the company will set in their marketing plan a target of 100 units. But guess what? They'll give the target to the salespeople. This is just as an example. They'll say you need to sell 110 units. Why? Because once you ever go into the sales field or encounter salespeople, obviously it's a tough job. If you give them the target of 110, maybe they'll achieve 100, and then you'll still be comfortable enough because you're making profits at 90. So there's always a cushion or margin or buffer, as they say, which is kept in when you give salespeople the sales quota. Tough job. This is a very little bit about the history or evolution of how sales management came into being. Management itself, if you recall the name of Henry Fayol, who wrote his book about management principles in 1911, that's more than 100 years ago, that management as a formal subject is, relatively speaking, a new concept. Just like marketing as a field came later, and then sales also evolved like that. So before the industrial revolution, before mass production through machines started, sales was not given, sales as a activity or function was not given much emphasis because the scale of the organizations were small. So let's say you have a small shopkeeper, he knows his customers personally, he's been in that place doing business for a long time, he knows how much product to bring in every day and how much will be sold. So he doesn't need to make a sales push or a sales effort. This does not mean that marketing is not going on. This does not mean that customer relationship is not being built up. But at a very small scale, do you need a sales force or a sales team to push your product? Historically speaking, probably not. But as the industrial revolution started, meaning this is about 200 to 300 years ago, when machines started to be used to produce things, then the output and efficiency went up very high. Then companies had much more output than they could produce just through manual labor. And then that gave rise to the issue of how do we sell this very efficiently produced number of goods that we're doing. So at one point in time, in order to facilitate sales and to push the product, if you recall from marketing, push and pull strategies are there. So if you want to push the product, you're producing a lot through your machines, then you can hire wholesalers, and wholesalers will then distribute to the retail level. And depending on payment methods differ, big companies like I work for instance, Lever Brothers, now Unilever, they would take payment as soon as the truck left the factory. So they had they had signed blank checkbooks from distributors, and as soon as a truck would leave for a distributor carrying tea or cooking oil or whatever soaps, they would cut out a check, the accounts people in Lever Brothers office, and they would deposit it in the bank. Because of the strong sales cycle and reputation of levers, distributors were willing to pay uh, even before the goods had reached them. Imagine how good the cash flow position would be of companies like Unilever in Pakistan. However, not all companies are so lucky, and recovery of your the sales that you've made. Let's say you've delivered the product, uh, then trying to get money out of customers is no easy task. So at one point, distributors, middlemen were hired who helped you to push the product, get it into the market. And then, as complications arose and as production efficiency increased, the need was felt that this function needs to be managed separately. So, think about it. There's a human resource department of function, there's a marketing department, there's a finance, there's accounting, there's research, there's operations, there's legal, technical, there's the company secretary, the one who handles the legal affairs of the organization. There might be, depending on the size of the company, even a research uh, section or a department. So, similarly, the need was felt that now we need to manage this sales effort in a very, very professional and managerial fashion, which means we need to plan for it. We can't leave it to chance. Plan, organize, and control. So, market expansion was held through a formal sales effort, formal sales team, and sales management. Personal selling, which is a big part of the functions which sales managers look after. A lot of business to business sales is done through personal selling. Obviously, in this era of advanced technology, a lot of business sales can also occur through online means. You've heard of the brand Dell, for instance. You might be surprised to find that individuals comprise only 30% of Dell's sales, online sales. 70% are orders that are made by businesses. So when you're selling through a website, that is not personal selling, that's online selling. But still, even on online sales, you can sell a lot to a business. So personal selling refers to a personal. There has to be a face-to-face, in-person communication with an audience to paid personnel, which is your sales force, of an organization or its agents, in such a way that the audience, meaning the customers, perceives that the communicator's organization is the source of this message. Now, translated, what this means, if you recall concepts such as IMC, integrated marketing communications, let's assume that this is the salesperson and they're meeting this lady, the client. This person must leave an image because he's communicating. Leave an image which is consistent with the image the company wants conveyed. So if in their ads they convey a very sophisticated image, you can't send your salesperson dressed sloppily. The salesperson has to convey the same. It could be luxury, it could be professionalism, it could even be a casual image, depending on the nature of the product. So that's why the recruitment, selection, training, and monitoring of salespeople is very important. Even for telesales, you may have heard, or helplines, if you call them, you may have heard the announcement in Urdu कि क्वालिटी के मेयार को बरकरार रखने के लिए ये कॉल जो है मॉनिटर की जा सकती है, or something words like that. What this means is that the person who is speaking to you, the customer service representative or the salesperson, their boss has the access to listen into the conversation at any point in time. In some organizations, such calls are even recorded automatically so that if there is any issue or complaint, their boss can try to see who was at fault. So it's very, very important in order that the salesperson whose effort the sales management function tries to manage, he or she is very, very well trained and monitored. Here are some pros and cons, meaning advantages and disadvantages of personal selling, which is again a big part of sales management. Uh, Advantages are flexibility. Among all the promotional tools, personal selling is advertising, personal selling, direct marketing, word of mouth, etc. Personal selling is considered to be the most flexible, but it is also the most expensive form of communicating with your customers. But there's a lot of flexibility because a well trained salesperson can adjust the or adapt the message or their sales pitch according to the needs and wants and concerns and objections and resistance terms we discussed in the classes on campus. They can adjust to that and try to make a modified pitch so that they can make their sales. Also, good salespersons, they try to make a personal relationship with their clients. Obviously, not all customers are equal. Many banks have something called priority banking or something, some phrase similar to that, where they deal with high value clients. So it's very important to build a relationship with a high value client. But let's say somebody has 20,000 rupee salary and they withdraw it as soon as it comes into the bank. Most banks are not interested in developing a personal relationship with such clients. So not every customer has equal importance because not every customer is giving the same amount of sales or hence profitability to the company. So long-term relationships in which the company and its salespeople try to make sure that any grievances are quickly resolved and any unmet needs, which even the client has not voiced, they are, which are called delight needs. If you remember, customer doesn't expect it, but you do it for them. You can give assurance that they'll get appropriate services. And it has been seen that if a customer complains and that complaint is quickly resolved, then clients are willing to do business again with the company. Personal selling, the disadvantage is that it's a one-on-one medium. One person selling to another customer or client. You could have a group of buyers sitting. Let's say you're selling to a company. There could be 5 people of the company sitting in, and you're trying to make a sales to them. But it's still limited. It's not a mass audience. It's expensive, as I've already mentioned, because salesperson time and salary, the hours that they're spending with the client, that is a big expense. If you recall income statements from your accounting courses, after costs of goods sold, under general and administrative expenses, salary is the one of the biggest expenses. Many companies, the biggest expenses among general and administrative expenses. So salesperson's time means money. So there's also limit set to quota set for how many people a client has to meet. Numerous calls needed to generate sales. There's something called, if you studied in previous marketing courses, something called a marketing funnel or sometimes known as a sales funnel. So right at the top, you have many, many potential customers, and then as like a real life funnel, it narrows down. Then you get potential customer, then you get prospective customer, then you make a call to them, then you make a second call to them, Some say no outright, some are interested, then you pursue those who are interested, then even among those, some drop out, some continue, till finally you reach a completed sales. So again, time and effort is being spent. And here's another point among the advantages of person selling. You can solve the customer's problem uh, readily because you have a relationship with the customer. You can even anticipate issues and problems that they might face. And if the customer is complaining to you through whatever means, then it's your personal task to solve the problem. Now, all this is ideal, this is in theory. In real life, because of issues with recruitment, selection, training, and the sheer misfit between the job of the salesperson and the personality of the salesperson, uh, every time it doesn't happen ideally. So you might have encountered or may encounter in the future salespeople who are rude, salespeople who don't want to listen to your questions or queries or complaints. In fact, I've met salespeople who were not even bothered to make a sales. They probably hated their job so much. And that's why it's so important to recruit and select the right type of person who is suited for a sales job. And again, please keep in mind, if you think you are not suited for a sales job, just like Zig Ziglar was saying, nobody is born a salesperson. They can learn to be, and you can learn to be a good salesperson. You can learn those traits and characteristics that good salespeople have. You can develop the confidence. You can develop the rapport building ability, be good at words, be good at reading body language so that you become a good salesperson. It's doable, not easy, but doable. Okay, in personal selling, what are the responsibilities that a person might get if they are a salesperson who has to go out and make a sale? Uh, One is order getting. Of course, you can take orders over the phone or over the internet. Here, you may have seen in retail stores, salespersons, if you've had the chance to see, many come with their notebooks or their registers. Some even have digital devices on which they take the order that the retailer is giving them. In some cases, one-on-one encounter with a salesperson, they give their sales pitch, and then if you've agreed to it, if they've been successful, then you sign on the dotted line, as they say, and the sales agreement is done. Sometimes you can cut out a check or make a payment then and there, or you can pay later through online or some other means. Seeking out customers, very important. Please remember that the term market in marketing does not mean something like Empress Market or Hyperstar or whatever, or Imtiaz Supermarket. In marketing, the word market has a specific meaning. It means the group of actual and potential customers. So let's say you have 5 customers, but maybe there are 20 more who can potentially be your customers. So it's very important to keep an eye out on potential customers. And obviously, it's also equally important to keep your current customers satisfied. Again, as long as they're providing good revenue to you and good profitability. And also keep in mind, not all customers are the same for the company. So it's the salesperson's job, somebody who's involved in personal selling, to find out potential customers, reach them, contact them, try to set an appointment with them, and then try to make their sales pitch. It's a numbers game. Creative selling, we'll explore this later. Selling, there are various ways or approaches to go about it. There's a straightforward method that here I'm selling this. Do you want to buy it? As crude and simple as that. Then there are, I think, one of the most sneakiest, and it's also considered unethical way of selling is to use marketing research as an excuse for selling. And this also happens for some very low level brands in Pakistan, that a person will approach you that, excuse me, sir or madam, we are conducting a survey. Would you like to please take part? So some people agree to it and they say, okay, well, this person is only going to ask us some questions. But the real purpose of asking you questions is to lead you into the product which they're pushing or selling. So they'll talk about, let's say somebody wants to sell, and this is an actual case actually, they wanted to promote hair removing creaming among college and university students. Now, selling a product like that is going to encounter resistance on different groups. So, what they did was they hired a team of students at the university and gave them the task of I was not personally involved in this. I heard about this from those who were doing the project. They hired a team of students to use a survey to approach potential customers, which were the female students at the university. And they say, we want to ask you a few questions. Do you use this? Do you use that? So many potential customers, they weren't too shy about talking about, generally speaking and anonymously, about what products they use, whether they use creams or waxes or laser or whatever it might be for hair removal. But towards the end of the survey, then came the real selling part. They'd say, well, thank you for participating in our survey, and here is a sample of a product that we are giving out free, and if you like it, then here's where to buy it from. So there are various ways to go about uh, making your pitch and creatively selling your product. Pioneering, this relates to high tech products, or it could relate to products that are new to a particular market but not necessarily new to the world. So you have to make an effort. A pioneer is somebody who does something which others have not done before. So you have to sort of make a pitch. I remember Akio Morita, the founder of Sony, how when he started, he was importing audio recording tape recorders, those large size tape recorders, which are as big as a small suitcase earlier when technology wasn't so miniaturized. He was importing those from the US and then he was trying to sell them, but he wasn't finding buyers. So he made a list of what possible uses could a tape recorder be used for. Then he thought, okay, I'll visit businesses, I'll sell them that you can use this tape recorder to tape meetings, record meetings. Then he went to universities and said, well, teachers can record lectures, uh, nature explorers can record the sound of birds or animals for their research purposes, and so on and so forth. And then said something very interesting. Akio Morita, the founder of Sony, he said that I realized that I was not in the business of selling tape recorders. He said he realized he was in the business of education. Now, of course, he was selling and he had a company, but what he meant by that was what we're talking about here, that he was probably among the first people to try to sell tape recorders to businesses and educational institutions. And he had to make the effort to educate the customer that this is something that is obvious, that is of obvious use to you. Now, of course, tape recorders are digitized and they're on our mobile phone and laptops and whatnot and handheld devices, and the uses also of those are easy. Account management. Now, this is nothing to do with accounting as a subject. The account is the client. So, let's say you're an advertising agency and one of your clients is Procter and Gamble, P&G, or one of your clients is Nestle or Angro, one of let's say some big client. Now, a typical agency, an advertising agency, survives. Their bread and butter is on big clients. You can have small clients, but the regular clients, the ones with the big budgets, are the big companies if they're advertising. So each company, from the advertising agency's perspective, is an account, and that account has to be managed. So there's a salesperson, an account manager, who looks after the needs and requirements of the company, what type of promotional programs they want, what type of ads they want made, and then they relay that to their company. the agency, and then they make sure that the whatever work, whether that's a new print ad or a television ad or radio commercial or outdoor activity, whatever the company wants done, the advertising agency or creative agency actually does that. So this person has a sales role because they try to get business from the customers. Why don't you make a new ad? Why don't you release more ads? Here, here's another channel, and it's a hot channel. Why don't you advertise on that? They try to get uh, business from their customers, but they also have a dual responsibility of managing or tracking that the proper work is done for the client in their agency. Order taking itself is has some parts to it. You can write up the orders, meaning again, it can be digitally recorded as well. Uh, Scanner devices can be used. Balls has been using them for some time. They have handheld devices or devices on their wrist on which they scan the barcode of the typical freezer whose stock they're taking, and then they will ask the retailer how much or what type and type kinds of ice cream they want replenished and so on. But you may again have also seen salespeople who come up with simple notebooks, so they have special format printed registers in which they take the order, the time and date, and who gave the order or what type of product. Invoice checking, invoices are made. Uh, I don't know to what detail you've studied in accounting or finance. There's a pro forma invoice that's sort of an idea, price idea to the customer. Then, if the customer agrees to it, then a formal invoice is issued. So, the salesperson also has to check that the invoice has the proper items listed, the proper prices are there, the proper part numbers are there, it's properly signed, proper copies have been made if need be, and so on and so forth. Because any error here, the customer will, it will reflect poorly on the company and the quality of the customer's products indirectly. Order processing is again a whole field, and while the salesperson is not going to go into the factory and make the product or might not even distribute the product personally, but they do keep a track as the face of the company to the client that where is the order in the pipeline. So once the customer is given the order through whatever means, electronic or through personal sales, the order goes to the factory or it might go to the warehouse. Some products are made on demand and some products may be available ex stock, meaning the factory has already made them and they're stored in the company's warehouse or the distributor's warehouse, and the order is processed. And of course, order processing should end in delivery of the product to the customer. Suggestive selling. Uh, you have already encountered this, believe it or not. If you've been to McDonald's or KFC, they are trained in this. So let's say you want deal number three, whatever deal number three is, and the person at the counter at the cash register may have said to you, sir or madam, would you like to upsize this? And you'll say, well, how much is it? And they'll say, well, it's only 20 rupees or 40 rupees, whatever it is. So you'll get a larger drink and a larger size fries. So some people go for that. And then if they see that, okay, you're buying more, then they might make even more suggestive selling. They say, well, we have a deal on our apple pie. Would you like to go for that? Would you like some ice cream with that? And so on and so forth. So suggestive selling is also a very powerful tool in order to sell more to the customer. Again, the idea is to raise revenue, control costs, and profits. This slide we'll cover later. Okay, I hope you can see there's a little bit of a shade on this slide. So here's a sequence of uh, right at the bottom here it says prospecting. There's a font issue here or rendering issue of the software. This says prospecting, identifying potential customers. So this is the first stage. This is so kind of a reverse funnel approach. The funnel is upside down, but here is the kind of a pyramid. So this is the biggest number of potential customers. Then you have a pre-approach. You qualify the prospect, which means the list that you made here. Let's say you've got a list of 1,000 potential clients. Then you'll go through that list and see, okay, among these 1,000, who can really be, who are favorable, who it would be worthwhile to spend our time with, can make us sales. So let's say at the want level, two people might want a Mercedes, but one person doesn't have the money to back up that want. So you will disqualify such a prospect or customer, and then sort of let the others who are qualified pass through. Then you will approach the prospect. The prospect here means the customer or client. Okay, you might call them, you might encounter them, depending on the nature of the sales and the product and service. You might do a mall intercept, you might go to their house, you might visit them in their offices, and you basically want to set up a time so that you can make your sales presentation. So this is also very difficult. I don't know whether salespeople have ever approached you. I've had encounters where salespeople were calling again and again, trying to sell me something to set up a time so that they could meet me, make their pitch about selling their financial services, or even in this day and age, selling the paper encyclopedias of time, life books for children, and so on and so forth. So this is not an easy task. Then once you've got the time, you make the sales presentation. Could be 5 minutes, could be 20 minutes. It all depends on the nature of the product. Then, if you might recall this term I've mentioned many times before in class, this the client, the prospect, the customer, potential customer may typically raise objections. That the product is very good and I think it might be of use to me, but I don't have the money. That might be one objection. Or they might say, well, I can understand how this product is of use to some other people, but it's not really for me. And of course, that also could be a lead in to the salesperson that, okay, can you give me a list of those people who might be interested? But here we're talking about objections which the potential client is making. Or they might say, well, I already have one of these things that you're selling. I bought it 2 years ago. Why should I buy another one? So there are many typical objections which people make, typical meaning based on the nature of the product or category. And a well trained salesperson already knows the typical types of objections the client will make. They have ready made answers, they can modify that answers, and we have discussed certain examples in class before. If you overcome the client's objections, then you go for closing the sales. Now, closing the sales means that you have the customer commit that they will buy the product. So, typically, this involves an order being placed, signatures being put down on paper that, okay, you have agreed that you will buy the product. Again, payment methodology might differ. It could be upfront payment, it could be before the product is delivered, it could be cash on delivery, and so on and so forth. But because sales is a part of marketing, to my mind, it doesn't end here. Once the sale has been done, then as we discussed in the previous slide, the salesperson must monitor where the order is, make sure the order is processed quickly, accurately, and reaches the customer. It doesn't end there either. Once the product reaches the customer might say, this is not what I ordered, it didn't reach me in a good condition. Or even if the customer says nothing, a good salesperson for a high value client will follow up that, dear sir or madam, you bought this product at such and such date or so many days ago. Are you satisfied with it? Are there any issues or objections? Again, this is in a ideal situation for high value clients. This doesn't happen with every sale, with every salesperson for every type of product. So this is the person selling process. So here's as a classification of different person selling approaches or methods. So these are theoretical, and we have little time for this session. We'll explore this probably in the next session. about how personal selling different approaches can be followed through. So first you have, I'll just be able to do probably the first one here. You have the stimulus response selling approach. Then you have the mental states, will cover this, the need satisfaction, problem solving. So let's look at the stimulus response selling approach first. So this is from psychology. There's a stimulus response methodology in psychology where every human being is faced with certain stimuli. Stimuli is plural of stimulus. The stimuli could be the marketing program, your product price place promotion. A part of that product price place promotion could be the sales effort or team that's there. So in this case, because we're studying sales management, the salesperson or you, if you're the salesperson, they are the ones who are providing the stimuli. The stimulus specifically could be a call made to you, or they're stopping you in a mall, or coming to your house, or knocking on your door to sell something, or coming by to your office, sending you an email. The different stimuli which could come from the salesperson. And in as a result of these stimuli, you want a response from the customer. This response could be, okay, I'll be willing to meet you at such and such time for such and such a duration, or okay, you can call me at such and such a time, or can you send me some material which I can look over before you come over, or material which describes your product. There are different responses. The ultimate response obviously is that you want to make a sale. And again, it doesn't end with just any response. Purchase, sales, revenue. This is what the salesperson is given a target with, because this revenue or sales that is earned is uh, directly related to the profit and revenue function of the organization. So I think we are out of time here for our first session, and inshallah we will continue with this slide for our upcoming session. If you have, again, I must reiterate and emphasize, once you get a chance to see these recorded sessions, please, I'd strongly encourage you to go on our WhatsApp group and mail in and send in any uh, queries or questions that you might have, or observations or feedback, which I greatly appreciate. So thank you very much.